Yo, what's up guys, it's your boy Top Tool here. So you guys, this strategy is very, very similar to my breakout strategy as well, or the breakout strategy, but the only difference is in this one, you're not necessarily only looking for consolidation, you're looking for any kind of market structure. So as long as there's structure in the market, you're just looking for the break of that structure, so you trade it with the way it's going. You're not predicting, you're reacting. So I notice most of the time right now, it's much harder to predict exactly where it's going to go. So instead of predicting, let's say, this is for the newer traders actually, by the way, too. You guys, if you're advanced and you guys already have the skills, you guys know, you have your strategy down. This is more for like the newer people or the people who don't want to put in that much work, I guess I would say. Regardless, you still got to put in work. But this requires a lot less attention to detail. What we're looking for is, like I said, very simple market structure. It could be consolidation, it could be a range. And what you're looking for after that is the break of that range, break of that structure up and or down. You're not predicting, I want to get a sniper entry if it goes up to this point and then comes back down, or if it goes down to this point and comes back up. All you're doing is reacting to what's happening right then and there. Especially like if you have a structure on a higher time frame, the break of structure would be much more identifiable and much more easy to identify on the lower time frames. But anyways, you guys try this out. Let me know how it works. If you like the video, leave a thumbs up. Also subscribe if you're not subscribed, and share with your friends if you think it'll help them. Totally optional, but this is just something I've come up with to make these markets a little more simple and easier to, trade on. So basically the easy strategy that I was talking about is you're just finding when the market's in structure like it is right here. So you have your highs here and your lows there. And instead of predicting, we're just going to react to what's happening. So as far as not predicting, we're not trying to figure out is it going to buy or sell. We're just going to wait and see what happens. Now, once we start buying, we're going to buy it from the break of structure. So your entries could be really anywhere in here. Anywhere in here. Those are all breaks of structure. Now, instead of trying to determine to take profit, we have a stop loss still, and that's going to be below the highs if it breaks up high. So just like the breakout method. And if it broke out low, let's say down here, your stop loss is still going to be up above the bottoms. But our take profits are more like when it just comes back into structure. So if market comes here and then consolidates that structure, or if it's, staying here in this range, those are all structure. So right there is when you take profit at any point at that time. It's just very simple, very straightforward. You're not guessing. You're not, there's not that much work to be put into it. You're just looking for structure. And you're looking for a break of structure. So let's say the same thing that's going to happen that already happened here. Hang on. So here we have structure. That's all market structure. There's no breaks. So then we have a break of structure here at the bottom. So we have structure here on the right-hand side. This is market structure. And then once it breaks out, we're selling down, and then it came back into structure here. So sell from the break, and then you're just reacting to what the market's doing. You're not having to mark anything up. You're not looking for necessarily formations or whatever. And I think that's a really, really, really solid, easy, straightforward way to take trades. Does that make sense though?
Yes.
And then two, you can do it like on lower time frames. So lower time frame, you're gonna have much larger structure, but like even like right here, right? So right here we have market structure, and then it broke away from that structure, and then it gave you multiple points of retests here on the lower time frames to enter. Those are all potential entry points. That's about 2 hours, 3 hours worth. So same thing right now, we're waiting for it to come back into structure. This is a current trade. And let's say it makes structure between here and, it makes structure between here and here. We're just trading or reacting to the break of that structure. So if it breaks down, we're gonna go ahead and sell it down till it comes back into structure. If it breaks up, we're gonna buy it up till it comes back into structure again as well. But yeah,
it's simple.
Yeah, it's pretty simple. You just instead of, like I said, instead of predicting, like, let's say like on GJ, right? So I'm predicting right now that we could sell right here, right? Let me get rid of some of this stuff on here. So right now I'm predicting that the market's gonna come back down off of this. So we're entering a sell position right here, right? And then you're putting your stop loss above, you know, it could be above this zone, which is much less likely to go above than this one. Let's say we don't have any of this stuff here. Okay, so now instead of looking at these support and resistance zones, we're looking at market structure, which is here. We're in structure currently, so we're reacting to it breaking out up, or reacting to it breaking down below. So it kind of takes the guessing out of it, I think. And it's more like a momentum trading style, I'd say. But I really like it just because it's super simple and there's not much to do. You're just all you have to be able to do is identify structure and identify breaks of structures. So if you wanted to practice it, you could go back and look for structure points and then when it broke out.
Yeah.
And then you're just reacting to it. You're not trying to you're not trying to get a sniper entry. You're not trying to, you know, look for breaks and retest necessarily. You're just looking for a break out of structure. And typically too, this will work best in volatility when it's most volatile. So if we're going to when it's most volatile, you want to go, you know, let's say 10 p.m. PST. So for you, I think that's 7 in the morning since you're in Norway, right? And then probably and then up until 10 a.m., which would be 7 p.m. for you. But when it's most volatile, this will work the best and it's the most simple and you can trade it probably the easiest. Yeah, I'd say try it, man. It's super simple, it's super straightforward, and like I said, as long as you have structure, all you're looking for is a break of that market structure.